So again, just an early reminder for this morning at the bottom of the hour, we do get the US non-farm payrolls print for the month of April. And so ahead of this, just seeing the S&P 500 flat on the session, the dollar's down around 0.2%.
Good morning and happy Friday out there. Hope everyone's having a good week so far. We've got non-farm payrolls with the estimate of 240,000, unemployment with an estimate of 3.8% coming in just about 12 minutes here. Goldman Sachs talking about non-farm payrolls data expects that we could have a bit of an upside beat. Their model looking for around 265,000. And if that happens, they would say their market expectation reaction would be a loss of about 25 bips on the S&P, and I'll put this out there.
So we are just approaching 10 minutes away now to the bottom of the hour, where we do see that non-farm payrolls employment situation report for the US, representing the month of April. So US non-farm payrolls forecast is 240K off the prior 303K, with a range of 280K to 150K expected. The unemployment rate forecast at 3.8% from the prior 3.8%, with a range of 3.9% to 3.7% expected. Average earnings year over year forecast 4%, prior 4.1%, range of 4.2% to 4% expected. Average earnings month over month forecast remain unchanged at 0.3%. Average work week hours, the forecast is 34.4, unchanged off the prior 34.4. Private payrolls forecast at 195K on the prior 232K. Manufacturing payrolls forecast 5K on the prior 0K. And labour force participation forecast is to remain unchanged at 62.7%. So looking at some analyst commentary ahead of this then, Wells Fargo note that the labour market was widely expected to lose momentum this year, but the opposite has happened. They note that the economy has an average of 276,000 jobs per month in Q1 of this year, which is up from the 212K per month average for the fourth quarter of last year. They note this sustained strength in hiring has left a few people without work, and the unemployment rate has been below 4% for 26 months, which is more than the total number of months below 4% in the previous 50 years combined. So they say that despite the evident strength in the jobs market, there are some chinks in the armor. There has been a trend decline in jobs postings, fewer small businesses looking to hire, and news of layoffs keeps popping up as well. So Wells Fargo also note that despite these headwinds, resilient spending and robust economic growth ought to be supportive of further growth in payrolls in their view. So they anticipate the economy to add 250,000 jobs in this report, which is slightly higher than the median forecast of 240,000. And they see the jobless rate at 3.8% in line with the median expectations.
So Apple announced an enormous buyback program, $110 billion. The stock actually rose from trough to peak yesterday. About double that of market cap was added. So I guess buybacks are just the gift that keeps on giving. You announce them and you get more market capitalization into your stock than what you're actually adding in the form of buybacks. Now, obviously, China sales were less bad than expected. There were some other somewhat encouraging signs, but overall, it was a fifth quarter in a row of declining sales. iPhones are not really recovering. That is their key product line. So there are some concerns with this company, and my own 2 cents is, they really ought to be spending more money on trying to build a durable competitive advantage than just buying back shares. I feel like buybacks, yeah, I get it. You're trying to return capital to shareholders or whatever the, sort of phrasing for how they justify doing that might be. But doing this level of buyback authorization with the market near all-time highs, with Apple's stock objectively a bit overvalued, especially if you net out all the buybacks, I just don't think it's necessarily a good look. I really think the company should be spending more time and more money trying to improve what they're offering to the public so they can get some more traction.
So we're just approaching 5 minutes away now to the bottom of the hour. We do get the US employment situation report for the month of April. Non-farm payrolls forecast 240K on the prior 303K, with a range of 280K to 150K expected. Unemployment rate forecast 3.8%, unchanged off the prior 3.8%. Range sees 3.9% to 3.7% expected. Average earnings year over year forecast 4%, prior 4.1%. Range of 4.2% to 4% expected. Average earnings month over month forecast 0.3% on the prior 0.3%. Average work week hours forecast 34.4 on the prior 34.4. Private payrolls forecast 195K on the prior 232K. Manufacturing payrolls forecast 5K, prior 0K. And the labor force participation forecast to remain unchanged at 62.7%. So looking at some more analyst commentary here, seeing comments from JP Morgan, who think the Goldilocks zone for employment is 125 to 250,000 jobs. They note that anything above 300K, the market will move to thinking that the economy is overheating, especially if we see an increase in average hourly earnings as well. Alternatively, while a 75 to 125,000 print will not crush equities, it will shift investors to a more cautious stance, as there are still critical mass of investors who see an inverted yield curve as too powerful a signal to ignore. So while JP Morgan's Kelly is not in that camp, since the yield curve has been inverted since July of 2022, and think a recession comes at the earliest in 2025, this view is espoused by material amounts of AUM, or assets under management. So that said, and once you get a 50K to 0 or negative NFP print, then this changes the narrative to recession or stagflation, subject to CPI levels.
And
also, just seeing some commentary from Nomura ahead of this as well, who expect job gains in slowed to 255,000 in April. They know that this will be the lowest reading since last November, but in line with the 6-month and 12-month averages.
And we can see liquidity disappearing around price in S&P.
And Nomura comment that lead indicators for employment growth have been mixed, continuing claims ticking down in the survey week, and tax withholdings was strong in early April. They note that service sector surveys are a red flag, though. Both national surveys, the ISM and S&P PMIs, show contracting employment in their latest readings, and the ISM services employment has been below 50 for 3 of the past 4 months.
Yeah, it's definitely a lower liquidity area ahead of the event here. This is something that happens almost ahead of every event. It's why I caution trading events too aggressively. You got to know exactly what you're doing and how to manage your risk, because otherwise this lack of liquidity can, have price gapping up and over or below your stops pretty quickly. You may not get the kind of fills you want, so just be careful if you're trading this. If you know how to trade it and you're trading it well, more power to you. But, this means there's going to be a wider array of price outcome possibilities that could happen quickly with a lot of slippage. So just about a minute out here. We do see some liquidity building above at higher levels, not as much below unless we go all the way down here, but I don't think
1 minute
price is gonna...
remaining. I'll lead with US non-farm payrolls. Ten seconds.
Here we go.
$175K, $175K, that's lower than forecast. $240K. Unemployment rate 3.9%, 3.9%, higher than forecast. 3.8%. Average earnings year over year at 3.9%, 3.9%, lower than forecast. 4%. So looking to the markets here, strength in the S&P 500, weakness in the dollar as non-farm payrolls comes in cooler than expected. Private payrolls 167K, 167K, lower than forecast. 195K. Average work week hours 34.3, 34.3, lower than forecast. 34.4. Average earnings month over month 0.2%, 0.2%, lower than forecast. 0.3%. Manufacturing payrolls at 8K, 8K, higher than forecast. 5K, and the labor force participation at 62.7% as expected. Noting an upward prior revision to non-farm payrolls, revised up to 315K from 303K.
What?
The private payrolls was also revised up to 243K from 232K. Manufacturing payrolls revised down to minus 4K from 0K.
We had an upward revision.
So again, non-farm payrolls are cooler than expected, but the unemployment rate also higher than expected. Also did note those average earnings coming in lower than expected as wage costs are being scrutinized at the moment. So again, just seeing S&P 500 up around 0.75% in pre-market trade, with the dollar down 0.75% according to the Dixie. We have posted out the US employment change reports on the feed for anybody interested. And so most Treasury yields tumble at least 10 basis points on the day now. The Europe stock 600 rises after the jobs data as well, lost up around 0.9% on the day. Money markets price in 77 basis points of ECB rate cuts in 2024 from 70 basis points before the data. US Fed Fund futures raised the chance of a rate cut in September to 78% after the jobs data versus 63% just before. Eurozone government bond yields extend their fall following the US data as well. Bund yields, the 10-year, down around 9 basis points. Investors now move to fully pricing in the first Bank of England rate cut for August. Thursday saw September, according to the OIS curve.
Overall, pretty bullish reaction here to non-farm payrolls across the board. You can see that mega bid in the NASDAQ and the S&P. We can also just go over here, look at what's going on in bonds in the 10-year note, and you can see there was a pretty enormous bid here. There was some selling into this. You can see some iceberging, institutions absorbing some of this, but nevertheless, this is a pretty enormous move off the lows in the 10-year pre-market, and that's also helping to provide some relief to equities. So we'll be watching this during the cash session, but overall, also euro,
Yen
big
extends
bid.
gain against the dollar to advanced 1% now to around 152.13 to the yen.
And Euro's following a similar path here, really getting a strong bid on that disappointing data overall. I guess you got to ask, disappointing to who, though? For people looking for jobs, there's not as many jobs out there apparently, so disappointing to them. But for the market, not disappointing at all. Bad news is good news, even with unemployment ticking up to 3.9%.
Yes, stop alert.
A
By
UK 10-year gilt
1003.
yields fall to the lowest since April 15th.
Dollars down about 2/3%.
Yes, stop alert. By 1021.
US rate futures now price in 2 cuts of 25 basis points this year versus 1 before the data. China's offshore yuan rising 0.5% to 7.1701 versus the dollar.
NASDAQ futures bid up about 1.66% pre-market here. S&P about 1.2%. Right up to this gamma flip level. We'll see if that ends up mattering at all. We can definitely see there's a lot of overhead offers here, especially for a pre-market session just around that level. Now, if we do push deeper into positive gamma territory, it does change how dealers are likely to hedge in this environment, making it more likely that they buy dips and sell rips, compressing volatility. Right now, we're sort of in the neutral gamma zone, just below that gamma flip level that our model has calculated. And we do still have that really that really large bid down here. It's just been sitting down there for quite some time. So someone is still interested in lower prices, but if and when we get there is a whole other matter altogether. Cloudflare is down about 12.72% pre-market after their earnings. Expedia down about 10.57%. Square or Block, or I'm not really sure what they're called today, after that big markdown they had recently, they're up about 10%. I did call out some pretty big sweeps in the calls for Block that were trading recently. Looks like someone knew something there. Fortinet down about 6.34%. Disappointing billables. I said a while ago that this company
Britain's
story
FTSE 100 up 0.8%.
that the story at Fortinet was kind of broken because management wasn't able to remedy those billing issues that were supposed to be a one-off. Now it's been 3-4 quarters of this issue dragging on. Apple bid up 7.27% pre-market here. And we just got about 50 minutes here until the opening bell. The next items on today's economic calendar.
Dollar yen falls 4% on the week, set for biggest drop since November 2022.
We'll have S&P Global Composite PMI at 9:45 a.m. and ISM Services PMI at 10 a.m. That'll probably be the most important other economic events today to pay attention to. And I'm going to really be watching prices paid on those ISM and PMI, S&P PMI data releases, because we saw some concerning data in the manufacturing where prices paid was rising while new orders and employment and other activity was slowing or falling. So that is a theme. If we see that in services as well, those services have been comparatively stronger, starting to slow a bit here. It would be a little concerning to see prices continuing to rise there. That's not something we want to see, more potential for cost push inflation. And the other side of it is, of course, companies can decide not to pass on costs, but that means margin compression. So it's sort of one of those double-edged swords. If you have the pricing power, you'll use it. That means consumers have to pay more. If you don't, you lose your margin. And so kind of important to distinguish which companies have that pricing power in that environment so they don't have to realize those smaller margins as well. We'll zoom out just a little bit more just to, again, show that reaction to non-farm. You can see it here. at 8:30. Another thing you'll notice here, look at the lack of liquidity going in. So this is the type of move that, if you were trying to fade this, you might not get your stop filled the way you wanted it to. It could kind of gap above where you wanted it before you get that fill, because there's that pocket of illiquidity during the event. This is why I continue to encourage folks, especially newer traders, to be careful trading events, because if you're on the wrong side of it, it can hurt quite a bit. Now we do see the market rising up into this area of resting liquidity overhead, seeing some resistance there. It's not quite what I would say is a death cloud, but it is enough on offer that buyers have to show they have the demand to push through that supply. If they do, we do have resting offers above just around that Gamma 2 level on SPX that we could see price pushing into. Russell 2000 futures really leading the pack higher here, now up 1.78%, following right along with the drop in 10-year note rates. I've noted repeatedly that the Russell is almost trading inverse to 10-year note rates because of how much of the Russell is sensitive to interest rates, right? It's about 40% that doesn't make money, so they're pretty sensitive to the prevailing interest rates. And then you have the regional banking component, which is also sensitive to longer duration because of the exposure of their loan book and their assets. So Russell is sort of the inverse of the 10-year rate. It's important to watch it. It keys off those rates, and usually the rates give you a little bit of a heads up ahead of what the Russell may do. Maybe in terms of milliseconds or seconds, but it can still give you a little bit of a sense. The VIX futures are falling 4.37% to about 1450 here, as we get ready to start Vol Crush Friday. We've got the 30-year bond futures bid up 1%, 10 years bid up 0.2%, 5-year note futures bid up 0.5%, 2-year note futures bid up just about 0.25%. Copper's back on the rise, up 1.5%, along with platinum up 1.58%, palladium up 1.91%. Gold and silver lagging a little bit here. Gold up 0.5% and silver up 0.23%. Crude oil.
Germany's 2-year government's bond yield hits lowest since mid-April after US data, down 11 basis points at 2.89%.
That's basically following along what we're seeing in the US, where it's a similar decline to a level we haven't seen since mid-April. Crude oil bid up just about 0.5% to 79.34 on West Texas Intermediate and 84.11 on Brent. It's if folks are asking about where's that resting liquidity down there, it's still down there. It doesn't mean it's going to get filled anytime too soon, though. These resting offers and bids, when they sit on the books after hours and across many days, it's a patient party that, maybe they get their fill, maybe they don't, but we'll keep an eye on that level. Russell futures now bid up almost 2% here, up 1.95% ahead of the open. 2-year yields dropping about 10 bips, 10-year yields dropping about 9 bips, 30-year yields dropping about 7 bips here ahead of the open. And a bit of a repricing of the Fed, now pricing in 2 cuts for 2024 to start as soon as September. We did see hourly earnings slow a bit month over month. That growth that we had seen slowing a bit. The forecast was for 0.3%, which matches the prior read. This time came in at 0.2%, helping the year-over-year actual coming in a bit lower than expected. Prior was 4.1%. Forecast was for 4%. Actual was 3.9%. So just a little bit of relief being seen there.
The SIBO volatility index hits a 1-month low, last down spot 9 points at 13.78.
So still sort of consolidating those gains that we have seen post non-farm. I just zoomed out a little bit so that you can see that liquidity coming back to the order book here. You can see that where we were pre-event, there was not much liquidity in the order book for the S&P. We're back to healthier levels of liquidity pre-market. Order book depth about 45,000. And we've just got about 37 minutes ahead of the open. Checking in on the NASDAQ, pretty similar look as the S&P. Recently making a new pre-market high at around 836 and then just sort of moving sideways from there. And the Russell, also a pretty similar look. Big old gap up on that sort of illiquid pocket during the event and then chopping sideways ahead of the open, but bid up about About 2% ahead of the open here. Crude oil not really seeing the same reaction, actually seeing a bit of a slip here after that data release because it suggests that the economy is weakening a bit. Natural gas just chopping sideways, not much of a reaction overall there. And gold actually had a really positive reaction at first, and it's giving a lot of that back now. Gold's still sort of in a precarious spot. So let's move back to the S&P. And let's just put this longer term chart on screen. Because what you can see is you're actually starting to push above my weekly pivot here on the S&P. And so we're just kind of, yeah, just about a handle above. So let's see how this resolves today, but this would have me looking more for longs if we can make a push above that pivot level during the cash
Wall Street
session.
Journal's Tim Moreos on Twitter says the April jobs report won't change much for the Fed because there's another one before their next meeting. They're more focused on inflation data, and it doesn't show unexpected weakness, but it will certainly help ease fears about a reacceleration or overheating.
Nikki Leaks, the Fed Whisperer, ladies and gentlemen. Let's take a look at some other charts pre-market here as we kind of wait for all of this to resolve. The cash open will be pretty interesting today. This is gold on screen, and gold is holding above some key support here. This 2309.20 level and 2286. Those are the two lines in the sand I have below. Resistance at 2318.20. And we were able to pop our head above resistance, but then fell right back down. So pre-market, not the most bullish look for gold, kind of continuing this consolidation correction. I still think we could get down to about 2286. And if we fail that, that's where I'd be looking for a move down to 2190. I don't think it's a presumption, but we do have to be aware that this big move higher here, there really isn't any support. It's kind of an air pocket of low amounts of transacting. So if we do get that look below and it actually has continuation, that's where I'd be concerned that we get that dip. But at 2190, I'd actually be a pretty interested buyer in gold, or maybe just a little lower. Maybe we get down to like, 2166, 2180, anywhere in this range where there's potential demand. I'd be looking for a rebid in gold. I'm not so sure we're going to get it in the low volume zone. But we certainly could. Sometimes you'll see a move more like this where the market's sort of indecisive. It looks down there, decides it doesn't want to transact, and then you get that push higher. So that's certainly something to be aware of. But the reason that I'm looking lower is because I'm looking at price and that sort of muscle memory with price. This is the last place gold consolidated. So I'd be looking for price to revisit that zone, consolidate again, and then make a push higher, right? So that's sort of what I'd be looking for if gold cracks that 2286 level. For silver, silver is struggling below its trend line, so it still kind of has a bearish look to it. I'm kind of looking at this as a two-way type of situation.
The effective Fed fund rate unchanged at 5.33% for May 2nd.
If we continue to kind of build acceptance below this trend line, it really looks like we're going to come back down to 25, 23 or so. So that's what I'm looking at on silver. It is giving back some of its pre-market gains here as well. Got crude oil on screen. Crude oil still, to me, it looks like it has room lower overall. I'm looking for 77.60 on crude before I'm interested in a rebid on this. So that's an area where we're coming back to a previous place of consolidation, and that's where I'd be thinking perhaps we get another chance to get long crude here. I know a lot of folks are talking about and looking at Bitcoin, what's going to happen next. Overall, I think that Bitcoin is in a bit of a downtrend here. We have this series of lower highs and lower lows happening. So to me, until it breaks out from that, I'm still looking at it just a little bit skeptically. I know we had the halving, and I know, past is supposed to be prologue, and so that automatically means price has to go higher because the mining cost has risen to like 100,000 plus per coin. And this does have a bit of a bull flag look if you can break out to the top. So if you break the upside of that channel, all bets are off for the bears. Bitcoin can go back to its highs, right? But if you break to the downside of that and it ends up being a bit of a head fake bull flag, I do think you have room lower. I would be looking at around 50,000 and change. So this is another one that's kind of in a key area of decision, and it's had a really good run, but often is the case that when you have this really strong impulse move higher that's almost parabolic, you give back at least half, if not more of that. So we'll see. I think a lot of the halving was front run. I don't think it was just about the ETFs. And if you look at the chart over the long term, you don't see the prior halvings having this level of a front run. So that's why I think this time might be different. I know, famous last words, but that's where we are. Let's take a look at the 10-year note futures. And this one actually really impressive move here, broke my pattern. I was pretty good about mapping out the pattern, these arrows here for posterity, but now we've made a larger upside move than what I was expecting. And that takes us to a point where we could get back to 109.17, right? If we did, that could be the next area to potentially sell, but that might not give us the same kind of a move. It might just give us a move back to this consolidation zone because of the recent strength in the 10-year note. And that sound there is just telling you that there is a volume pressure imbalance to the buy side. So that tends to be constructive. And that is why I added those sounds. You can see the volume pressure indicators on top here on my screen in Bookmap. And that just helps to give you kind of a better idea of very short term who's really taking control, who's showing some aggression. And let's take a quick look at Apple here. We've got Tim Cook giving us the victory sign as to where it is implied to open pre-market. You could see him. He was praying back here at the lows. It appears to work. If you just do 110 billion of buybacks, you get you get this type of a reaction in the stock. This is a fun chart. I just had a little fun with this. Here's him praying again. This is where the victory was last time, so we could just put the victory up here. And, overall, though, this stock hasn't done much in a while, right? It's just sort of been consolidating in this range. It's implied to open higher but we're not necessarily automatically going to make new all-time highs on this move. So I would be looking at Apple's move today just a little bit skeptically, only because the biggest reason it's getting this huge bid that's giving Tim his cause to celebrate here is the buybacks, right? Maybe less than feared slowing in China is helpful as well. But I'm looking at this with just a little bit of skepticism to see whether it can hold over the longer term. A lot of folks talking about Palantir lately, so we can put that one on screen. I'm not religious about gap fills, but I do think they're things we need to be considerate of. So if we do break below 1981, I think we have a kind of a quick trip down. We could get down to 1867 or maybe even fully fill that gap down to around 1785. Now, Palantir's earnings are coming up, and I think that's going to be the pretty decisive moment for this stock. Earnings can make or break a chart very easily. In fact, earnings tend to overpower technicals. So you've got Palantir's earnings coming in on Monday. I think that'll be pretty decisive for how this stock wants to move. Now, one thing that's encouraging in the near term is you're sort of starting to break out of this this downward trend, right? So that's at least helpful. But we do need to see a bigger push to the upside above this cloud, because right now we're still below the cloud. There's a volume weighted Ichimoku cloud on this stock, and that's telling you that you are in a downward trending environment. Now, if we break back into the cloud as the pre-market price action implies, that's telling us that we're in a neutral trend. So it's a time where things can get a little bit more volatile. It doesn't necessarily mean that, this whole move is resolved. I'd want to see price move above the cloud and close there. That would give me a greater sense of comfort that we have some potential to move higher. Now, this post-earnings move we got last time, it got pretty extended. It got pretty parabolic. And so this corrective move lower is not entirely unexpected. The biggest thing for me is I don't want to see the stock really make a new low. I don't want to see this area get taken out. Otherwise, I will get much more concerned, right? So here's kind of a good way to look at that. This is about where the line in the sand is, that if we do break below 16, a lot of this is going to look really bad. Like this is going to look just like a blow off, and you could have a lot more room lower. So overall, Palantir's had an incredible move off of its lows. It still looks constructive to me. It's just that, on a daily basis and with the risk of earnings coming up, I'm not going to have a strong conviction on this stock. I need to see what the company's management says on earnings. And there's key things to watch. Is their commercial growth still firing on all cylinders? Because they've been able to really impress on that. Are they still growing their bottom line profitability? That's also been impressive. Are they able to recover some of the lumpiness of their government contracting billables? If so, I think that would be pretty bullish as well. So we'll see. But for now on Palantir, I think it's sort of in the no touch zone because it has some work to do and earnings are coming up really the next trading day, right? So I'm not a person who likes to gamble on earnings much. So I'm going to wait for it to kind of see how that resolves. And earnings reactions typically take about 2 or 3 trading days before I have a better feel about where this company is going to go next. Got about 21 minutes until the opening bell. Just a quick reminder. Here is a reaction we had to non-farm payrolls. We had this big gappy bid up, and we made a new pre-market high on that 51, 56, 75, and then we've retreated just about 10 handles lower. We did see buyers pulling up that point of control, And so it's really going to be about whether we can push through all this resting liquidity above if buyers can really show they have that demand. Selling pressure increasing just modestly here ahead of the open. And I think that, we are in an environment where bad news is being seen as good news for a very simple reason. If you have weaker data coming in on the economy, and particularly weaker data on inflation, it gives the Fed more cover to potentially cut. Whether that's the right move or a tremendous policy mistake remains to be seen. But this data point from today's report gives those folks who are looking for a more dovish Fed and, rate cuts this year some reason to be optimistic that that could potentially happen. So we're in an environment where bad news is good news. That's kind of how this is being parsed. And so as soon as this data came out, you had a reaction in rates. Rates dropped, right? Because the longer end of the yield curve, the shorter end of the yield curve, all kind of pricing in a more hawkish Fed on the shorter end, more inflation on the longer end. That's being repriced a little bit after this data. We also saw the market go from a Fed cut in November to 2 Fed cuts, one in September and then maybe another one in November or September or December, I should say. And so that also kind of boosted animal spirits. So in a nutshell, bad news is good news because the market is more addicted to the liquidity from the Fed than really stronger economic data. That is unfortunately the reality here. This has been a theme, by the way, for quite a long time. And you can take it all the way back to like the reaction to the great financial crisis and how the market started just becoming more enamored by bad data that would suggest the Fed's going to come in and intervene more aggressively. So this is not a new theme. It's been an on and off theme for some time. And I think the bad news is good news theme was solidly reinforced by today's non-farm. And we've had it the other way around too. We've had stronger than expected economic data that you would think would be good for company earnings actually get a really bad reaction in the market because people assume it means the Fed is going to either not cut or potentially hike or not cut as much as they want. So a lot of this is really just about a game of chicken with the Fed and when they come in and intervene and how markets have become increasingly reliant on the Fed's, kind of the Fed's intervention, the Fed's put, the ability of the Fed to kind of come in and re-liquefy markets. So for now, I would say that that's kind of the reactions we're seeing. It's more about the presumption of what the Fed's going to do, how that's going to affect rates and prevailing liquidity conditions, more than how the data actually affects companies' earnings in the economy. If you want to turn off the bot announcements on Bookmap, if you're talking about the voice, you just need to go into your
Houthis say
Bookmap
they
settings.
would attack ships in the Mediterranean Sea.
You just need to go into your settings and you can turn off the alerts. Yeah, you're welcome. So I've been
As
asked
we did see this
about
earlier, as Yemen's Houthis military spokesman did note that targeting ships heading to Israeli.
So I've been asked a little bit about Bookmap and its time frame. So I'm just going to say that, and the specific question was, do I use Bookmap for longer time frames, such as days, weeks, and months? Notice you switched to TradingView for longer time frames. So for me, I like to look at it as Bookmap is my microscope and TradingView is my telescope. So I want to zoom in on near-term price action. There's nothing better for me than Bookmap. It gives me all the data I want, the resting and active levels of liquidity, the heat map. For the S&P, I have my advanced options visualizer. I also see stops and icebergs. That's granular data that's really helpful on shorter time frames. Once I go to days or weeks or months or years, I need something that's going to be a little bit more top level. So that's where I find TradingView is very helpful. And so I really primarily just use the two platforms. I use Bookmap for my intraday. I use TradingView for my longer term, and it's the microscope telescope relationship. It really depends on what's your time frame, what are you looking for, and also it's helpful to balance between the two views, right? They give you different senses depending on how you have your TradingView configured. With mine, I like to use volume profile and volume weighted Ichimoku cloud, and then I like to draw lines around areas of price action where there might be muscle memory, and often those areas of price action that could have muscle memory relate to areas in the volume profile. So for me, I've always been kind of like this. I've kind of had a different charting software for the shorter term, and then I'd like to zoom out with other programs or other websites. And for now, I've liked Bookmap more than anything else over the last 2 years for my intraday price action in futures, stocks, ETFs, currencies, things like that, and then looking at TradingView for the longer term in those. So hopefully that helps. Happy to follow up on any additional questions on that. What volume profile do I use? So I use visible range. So, for me, if I'm looking at a chart, right, I want to see the volume profile that applies to the price action in the chart. Otherwise, it's not quite as helpful to me. So I'm using visible range volume profile in TradingView, and I'm using session volume profile in Bookmap, which shows the current trading day session. Yeah, you're welcome. And I think for us as traders, we basically need to figure out what works best for us, right? What works for me may be different than what works for you. How I trade may be different than how you trade. It's all kind of about how we're wired and most importantly, what works. But what I try to do is show what I'm doing in the hopes that it helps other people kind of improve their own processes and figure out how they may want to approach the market. And just seeing a little bit more pressure here pre-market. We're just about 11 minutes away from the open, just giving back a little bit of these gains that we
Finance ministers
had.
and central bank governors of the EAN plus China, Japan, and South Korea in a joint statement say the spike in global commodity prices, heightened foreign exchange market volatility are among risks that could affect the Asian plus 3 prospects for the near term.
So just a little bit of pressure here pre-market, giving back some of those gains, moving below this point of control and closer to VWAP and into some of this resting liquidity below. Yesterday, skew rose modestly, but we are still in an environment where it's not a very well hedged market. So that's one thing that does fatten left tail outcomes potentially. Doesn't mean that it has to happen. It just means if you do have a risk off type of catalyst, that could be a greater concern in terms of how equities react. Pre-market, some of the larger gainers and losers that I'm watching. We've got Cloudflare down about 12.4%, Amgen up about 12.69%, Squarebit up 9.26%, Expedia down 8.92%, and Fortinet down about 7.59% on the continuation of disappointing billables for that company. Apple bid up about 7.25% pre-market, and MicroStrategy breaking that downtrend of, I think it's been cut in half, up about 6.14% pre-market. Not so sure what you mean about Bookmap timer. Could you give me a little bit more information about what you're saying there? The timer icon on the top. So the refresh rate is something you set in settings, but it's not actually displayed on screen while the program's running. I don't have anything. Are you talking about the volume pressure indicators, maybe? The NQM and ESM indicators with VPI near them? Those are volume pressure indicators from Market Pulse, if that's what you're talking about. Two places left. Okay, I see. Time slices. Oh, that's just about how you, yeah, basically how you slice up the time inside Bookmap. So I don't have that set up. I don't use that. I don't see any reason to. I also like to have the freedom to zoom in and out, both in terms of price scale and time scale. So I do a lot of that. You'll notice throughout the session, You know, I'll zoom in to microstructure, I'll zoom out. Like as we get to the open, I'm going to zoom in quite a bit for that opening price action as well. Yeah, I mean, if you want to set your refresh rate, what you want to do if you're interested in that part is you go to performance and chart refresh rate, and you can set it there. Like I have mine set to 33 milliseconds. That ends up being about 30 frames a second, and that's more than sufficient for me. The higher the refresh rate, the more CPU utilization because it's painting the screen more often. But you know, the human eye and human brain can only parse so many ticks per second. So I think having 30 is more than enough. So I set it to 33. Yeah, Rhythmic is my data provider. I find Rhythmic to be the best for futures. DXSpeed has the option for equities and ETFs, and I use DXSpeed for equities and ETFs. So you'll see if I plug in a stock later, you know, it'll come up under DXFeed. But yeah, all the futures data, I use Rhythmic for it because Rhythmic, from my experience, has really high quality futures data. It's also the only futures data for Bookmap that offers icebergs and stops. And not just by inference, where a lot of charts do it sort of by a guesswork from what I've seen. I've seen a lot of folks just sort of infer this is an iceberg because here's this large delta on the session volume profile. That's just sort of guesswork, unfortunately. Real icebergs, you're going to see them in Rhythmic in this flow. Like here's a real iceberg sell order of 600 that took 3 runs to get through. So it'd be like 3 200 lot runs on the sell side. So I find, you know, in terms of data, Rhythmic tends to be the best. Bookmap is working on their own data package directly with CME, so that should be coming out later as well, and we'll see how that looks. It'd probably be pretty awesome. But for now, I favor Rhythmic for that. And also, I have this S&P options visualizer on the right side, and that works with both Rhythmic or DXFeed. But again, I personally favor Rhythmic, and I think the data package from Rhythmic is only like $40 a month, which, all things considered, is pretty reasonable. So DLO, this thing looks pretty disastrous here. It did fill in this gap and it keeps moving lower. It's below an area of supply. You could see sellers continuing to sell into that. Overall, I'd say it's looking like it's trying to base here, but I mean, I guess you could make the argument it's just back to the point of control, but it is below this weekly Ichimoku cloud. It's obviously below the daily. And overall, this thing looks pretty gross. So I'm not too interested in it, either from a long or short side. It just seems like it's content to kind of bounce in this range around this point of control, sort of build. Now, if it was able to make a push above this weekly cloud, because this has been such a long-term decline, almost terminal, then I'd be more interested in seeing where it could extend to, because from there, you could have some pretty decent upside. But for right now, D-Local would be on my no-touch list just because I just don't see anything in it right now that has me getting too excited about this chart. You can see other global e-commerce names are doing quite well in comparison too, which gives you a sense of relative weakness. Not something you want to see. We're about 2 minutes ahead of the open here. And that sort of subtle knocking sound, that is the sound of volume pressure to the buy side increasing over 90%. And that's where you see that larger delta bubble indicating buyers are being a little bit more aggressive. So we can hear it, we can see it. And I find those audio alerts are helpful because we're not always staring at one screen. Maybe we're doing something else. You get that sound, you know, hey, maybe it's a good time to look at the chart. Yeah, it's let's see what we've got here. So the volume profile indicator is just the
Note to new and existing members, disclaimers posted in the high beta squawk chat room.
market is open. And we are getting a bit of a bid here into the open, getting closer to some of those pre-market highs here. And just starting to push above this gamma flip level into neutral gamma territory as we see liquidity building above. So let's zoom in a little bit to that microstructure, what we're seeing here in the open, into the open, and at the open. We do see some buying pressure.
So we're looking now to the market on open imbalance, 500 million to the buy side.
And you could feel that just a little bit. And you can see how now my new high and low lines have rebalanced for the open, because this will help us to very easily define the opening range in really any time frame you're looking at the opening range. 5 minute, 10 minute, 15 minute, 20, 30. You'll be able to see whether you're piercing those profiles at that time period. Right? So you can take note of where we were. You can see if price moves above or below, because the lines will obviously adjust, and then you'll know if you have a opening range, breakout, breakdown in whatever time frame you're looking at. So that's kind of helpful, something I added in recently.
Well, housing stocks, ticker Redfin, ticker Zillow, shares seeing a spike in activity at the open, new highs. Note this comes after interest rates drop.
Lots of data coming through. Seeing liquidity continuing to build above here. So far, buyers struggling a little bit with that addition of liquidity overhead. We'll zoom out a little bit to get a better idea as to where we see interest being placed by larger players in these resting offers and bids above and below. So far, pretty similar to what the book looked like pre-market overall. We'll zoom out just a little bit more. I'm pretty sure that really large resting bid below is still there. There he is, just waiting there. And we'll zoom back in quite a bit just to get a better idea of the microstructure here. Just a little bit more pressure fading away from those higher levels of resting offers overhead. Continuing to see some of that selling pressure in the S&P. There's not a lot of conviction here in this selling. You can see it in the smaller size of these delta bubbles, but nevertheless, we continue to push lower and lower here. And that other sound, that higher pitch sound, is indicating that sellers are showing some aggression as the volume pressure exceeds 90%. That's from the market pulse indicator. Seeing some negative pressure here in crude. Crude selling off here this morning.
That ticker Apple AAPL, sure seeing increased activity. Note this week's 185 puts are active for Apple.
And I've been saying with crude that we could get down to 77.60 and change.
In 10 minutes time now at 9:45 a.m. Eastern time, we get the US S&P Services PMI final read. Forecast 51, prior 50 spot 9, range of 51 spot 1 to 50 spot 9. We also get the composite PMI final, forecast 51 as well, on the prior 50 spot 9.
Moving back to S&P 500 here. Still seeing some selling pressure here. Reversing some of those earlier gains. Let's zoom out just so we can see where this all started, right? Takes a little more zooming. There we go. So there's that big gap up.
Ticker DJT, Delta Juliet Tango. Headline from CNBC, Trump media auditor charged by SEC with massive fraud, permanently barred from public company audits.
Woo!
DJT, she's seeing continued heavy activity.
That's spicy. What's going on over there? Down 6%. All right, so I'm going to pull up Apple because we're not really looking at any equities right now, and we may as well. And I'll just backfill that data for about 6 hours to get all the pre-market good stuff here. Oh, apparently I'm already subscribed. All right, there we go. Oh boy, Apple giving back some of those gains so far, still bid up pretty aggressively. So it's not like, you know, it's a one and done, but Apple trading up 6.68% to 184.77 here, slipping. It had a big buy up here, but it was really aggressively absorbed by sellers. And we've just been pushing lower from there. Stock is still up about 6.7% on that announcement of 110 billion in buybacks. That's pretty much it. Wasn't a new product announcement. But I do expect something from Apple next week. Okay, I've been following the story closely, so this is not uninformed speculation. I do expect that next week Apple is going to announce on-device AI models for their Macs, iPads, and iPhones with the next operating system updates.
Note interest rate sensitive securities seeing continued activity at the open. Ticker Tesla, ticker Sunrun, see new highs.
So I do think that they will come out with that announcement next week. They'll announce that they have several new devices, or not several new devices, several new AI models that can run on their devices that will be small enough that you can run on the device, but probably just a mildly upgraded version of Siri in all things kind of considered, in the sense that it's not going to be anything mind-blowing or extraordinary. They'll market it by saying that this is private, that your data stays on the device, that, this is different than the sort of AI that you may interact with at Meta and OpenAI and Google. That'll be the selling point. I'm not terribly excited about that announcement, but that is the announcement that Apple is going to put out next week. I'm 99% sure, because we've seen a lot of lead up to that. We've seen engineers talking about their new on-device models, that they're almost ready. We've seen some preview coming out of that in some of the operating system developer previews for these various devices like the Macs, the iPads, and the iOS iPhones. And it's only going to work on the newer, faster devices too. So it's not going to have this really large uptake rate. It'll probably be like the last two models of the phones and iPads and Macs and things like that. So we'll see how it goes. It'll also give them a chance to try to sell some of their upgraded hardware to people who get excited about this. But
yes,
at the end of the
iceberg
day,
alert. Sell 1,000. Iceberg ESM for CME sell at 51.41 crossed 500.
It's not necessarily a game changer, is the key. And Tesla did get a pop at the open, but it's giving some of that back here. Gosh, what a crazy high beta machine this thing is. But you can see it got a pop into some resting offers overhead. We are seeing some resistance overall. I don't think anything's really changed for this stock. I still have a negative outlook on it all the way down to 157.45. But obviously, we have to let price guide us. So far, we're seeing a lot of the gains being given back so far. You know, basically, we had this pop after the open, kind of shaky, moved higher, now starting to give that back again. So we'll see where it goes. Let's check in on gold. Gold also giving back.
In 5 minutes time now at 9:45 a.m. Eastern Time,
Oof.
we get the US S&P Services PMI final read. Forecast 51 on the prior 50.9, with a range of 51.1 to 50.9.
That
We
is an
also get the
oof.
S&P Composite PMI final. Forecast 51.
For gold, that is a big oof. Okay, this is just not what you want to see on gold. It's just hovering above this key level, 2286. If it does pierce that, particularly on a closing basis, 2190 comes into view. So just keep an eye on that. Yeah, so gold's really got a hold above this level here. We can see it on the chart. There is some interest below at that level. Let's see how we hold there. Let's also take a look at the 10-year note. This has been pretty important here. It had that big gap up on non-farm payrolls. We're now just sort of moving sideways on this, just a bit off of its highs. And we do hear some of those bearish sounds coming out of the S&P. In terms of volume,
Yes, iceberg alert. Sell 1000.
yeah, so a little bit of absorption up here. We'll see how that goes.
Ticker SGBX, Sandy Golf Bravo X-Ray shares seeing continued heavy activity at the open new highs for
1 minute
SGBX.
remaining now. I'll lead with the US S&P Services PMI final.
Ticker Tesla, TSLA, this week's 185 calls coming in active for Tesla. Shares seeing new highs.
Ten seconds. $51.3, higher than forecast 51, with the composite PMI final at 51.3 as well, higher than forecast 51. We're seeing a text release from Fed's Bowman here as well. So Fed's Bowman says that she remains willing to raise the federal funds rate at a future meeting should data show that progress on inflation has stalled or reversed. It's unclear whether the further supply side improvements will continue to lower inflation. Monetary policy stance appears to be restrictive, and she will continue to watch data closely to assess the appropriate monetary policy. Says her baseline outlook continues to be that inflation will decline further with the policy rate held steady, and expects inflation to remain elevated for some time. As she remains cautious in her approach to deciding future changes to the policy stance, says the extent of data revisions in the past few years makes assessing the economy even more challenging. Also, risk of loosening financial conditions and fiscal stimulus could juice demand, stalling and even reversing inflation's progress. She adds that geopolitical developments are also an upside risk to inflation, and the inflow of new immigrants to some areas that lack affordable housing could push up rent prices. Says that there is a risk that strong consumer demand and again more immigration and tight labor markets could lead to persistently high core services inflation.
Macro notes, Fed's Bowman out with comments. Fed's Bowman says, my baseline outlook continues to be that inflation will decline further with policy rate held steady. Expecting inflation to remain elevated for some time. Remains cautious on approach.
So we have posted out the US S&P Services PMI April final report on the feed for anybody interested. So Chris Williamson in this report, who is the chief business economist at S&P, says that service sector growth slowed in April to a sluggish start to the second quarter of US economy, alongside a concomitant cooling in the rate of growth of manufacturing output. The weaker service sector performance means overall business activity grew in April at the slowest rate seen so far this year. At current levels, the PMI indicates that GDP is expanding at a modest annualized rate of approximately 1.5% so far for the second quarter. The report's key findings for the service sector in the US note that growth of activity is at a 5-month low, and new orders fall for the first time in 6 months, and employment reduced for the first time in 46 months.
No ticker DXYZ Delta X-ray Yankee Zulu. Share seeing a spike in
Perhaps posted
activity,
out
new
Feds
highs,
Bowman's full
DXYZ.
speech on the feed for anybody interested. So this was a text release from Feds Bowman, the text of which was released on the Fed Reserve website, titled Brief Remarks on the Economy and Monetary Policy. So this was an unscheduled speech release.
At 10 a.m. Eastern Time, we get US ISM data, services PMI forecast 52 on the prior 51.4 with a range of 53.5 to 50.5. Services employment forecast 49 on the prior 48.5. Services new orders forecast 54.5 on the prior 54.4. Services prices paid forecast 55 on the prior 53.4.
Let's take a quick look at NVIDIA here. Everyone's favorite stock to love or hate, or otherwise simply discuss. I'll pull it back 6 hours so we get some of the data for it. Then we'll just give it a moment to load all that historical data. There you go. There's NVIDIA getting a pretty strong bid. I'm just going to tweak the settings for the sweeps and the absorption here. So don't need necessarily all of that on screen. So bear with me a moment as I do that. All right, so got NVIDIA on screen here. You have some pretty large resting offers overhead. 890 really catches my attention there. I think that'll be a proving zone for this stock. Let's take a look at options as well, because often this is a stock that is very actively traded. And indeed, you do have sweeps for NVIDIA coming through this morning. The most recent, a 930 sweep targeting next Friday's expiry with 110,000 in premium paid. Before that, a 990 sweep for, well, today. I'm sorry, 890. Boy, that makes a difference, doesn't it? 890 sweep for today, 167 in premium paid. 167,000.
Yes, stop alert. By 10:26.
Let's move back to the S&P 500 here. See some more buying coming through with some degree of aggression. And we are poking above, making a new high here. So breaking out of that 20-minute opening range just a little bit, just poking our head up into that larger offered liquidity overhead.
Iraq and Kazakhstan outline OPEC Plus compensation cuts, according to a statement.
At 10 a.m. Eastern Time, we get US ISM data, services PMI forecast 52 on the prior 51 spot 4, with a range of 53 spot 5 to 50 spot 5. Services employment forecast 49 on the prior 48 spot 5. Services new orders forecast Services new orders forecast 54 spot 5 on the prior 54 spot 4, and services prices paid forecast 55 on the prior 53 spot 4.
This one should be pretty
Kazakhstan
interesting.
is to make compensation cuts of 389,000 barrels per day, according to OPEC. And Iraq to make compensation cuts of 602,000 barrels per day this year, again, according to OPEC.
So just noting the S&P 500 extending gains. It's up almost 1% now.
No ticker Meta, META. This week's 455 calls coming in active. Shares seeing new highs for Meta.
Japanese Finance Minister Suzuki declines to comment on current FX levels.
Still some more buyer aggression here right ahead of ISM PMI services. We are breaking above that 20-minute opening range here and pushing into positive gamma territory, which should help to reduce some of that intraday vol we've been seeing. Got another NVIDIA 890 sweep for today, 107,000 premium paid. On the call side, and we're just about $3 away from that area, which is also where there's a large offered area of resting liquidity in NVDA, NVIDIA. Starting to see liquidity thin out just a little bit in the S&P here ahead of that data release. Be careful trading these events, folks. Well, that's a spicy one. 920 NVIDIA strike for May 17th, 1.1 million premium paid for those calls on an unusually
1 minute
large
remaining.
sweep.
I'll lead with US ISM services PMI. And Japanese Finance Minister Suzuki says FX should reflect fundamentals and excessive FX moves are undesirable. Ten seconds. 49.4, lower than forecast 52. Services prices paid 59.2, 59.2, higher than forecast 55. Services new orders 52.2, 52.2, lower than forecast 54.5. Services employment 45.9, 45.9, lower than forecast 49. Seeing some slight downside in dollar.
Top ESM for CME sell at 5,146.3, volume 732. ES iceberg alert. Sell 1002.
We have posted the ISM Services PMI April report on the feed for all those interested.
ES iceberg alert. Sell 1000.
I'll take our Bitcoin BITO. Share seeing continued activity after ISM manufacturing data, new highs for Bitcoin. Ticker UPLD, Uniform Papa Lima Delta. Share seeing continued heavy activity, new highs for UPLD. No company did report.
That was not good data, folks. Prices paid surging, employment dropping, new orders slowing, and ISM Services PMI in a very mild contraction. We are seeing some pressure here in S&P 500 futures. Let's take a look over at rates as well. We can see the 10-year slipping a little bit. That's telling us rates just pushing a little higher from their lows. NASDAQ had a pop and drop again. The head fakes on these events, very common because there's no liquidity ahead of and during the event. So you can go all over the map, but often is the case that initial move is a head fake. And we're seeing this data being parsed negatively by the market here so far. And I would just say that, this is a bit of a continuation. What we saw in the manufacturing data was similar. Prices paid rising, activity slowing. This could be a bit of a sign. It's something to watch for as we navigate through the rest of this economic data. Granted, these are diffusion indices, so they're just giving us a sense as to survey participants and what their responses are versus acceleration or momentum. But more participants are saying they're firing employees, new orders are slowing, and prices are rising. Let's zoom out, take a look at some of these key levels in options activity. We do have that hot put back
US
at
Treasury yields slightly extend their fall after the ISM services sector data. That's the 10-year yield, last down 5 spot.
Let's hear ARM Holdings, Alpha Romeo Michael share seeing continued activity, new highs for ARM.
See that hot put down, what implies SPX 5100. But the hot call is where all the activity really is. In fact, calls outpacing puts by quite a bit. 9,000 across the two most active puts and 14,000 across the two most active calls, with that hot call implied at about 51.7650 on ES. We'll see if that volume changes after this data print here. We'll check in on the NASDAQ as well. NASDAQ came down right above this point of control, starting to see a bit of a rebid there versus the S&P, which, was able to, had a little bit of a fallback here, was able to regain the point of control in VWAP so far. Sellers pulling down that point of control, however.
Yes, iceberg alert. Sell 1000.
Some bigger institutional distribution continuing here as well. Just saw that iceberg sale coming through. And we do see some resting bids growing below and resting offers rising above as liquidity comes back in to this market after it disappeared prior to and even during the event. And this is not a very liquid S&P market, folks. Only 46,000 order book depth, so be careful. Realized vol likely to be higher. Seeing some increasing selling pressure here as we look to potentially pierce that opening range, really whatever your time frame, to the downside. Right now, the index level calls are exceeding puts by about 13%. As we were looking at some of those most active levels, you can see it in the gamma profiles on the Discord as well. There's just much more interest in calls today. It is Lotto Friday, so that kind of makes sense. I guess people just love crushing vol today, but this data print, not the best. So the market's continuing to digest it. We're sort of chopping sideways in this range after taking an initial drop on the print. So when we're looking at this chart here, and we've got the column on the right side, the SPX Advanced Options Visualizer or SPX Options Visualizer, all these levels are corresponding to areas of where there's either active flow or there are positions on, right? So when we look at the hot call and the warm call, this is the most active call strike on the S&P 500, the second most active call strike on the S&P 500, the most active put strike on the S&P 500, and the second most active. And these are converted to ES levels because obviously the cash index and ES have a delta. And then you have the areas of existing positioning, the call wall being an area of potential resistance, the put wall being an area of potential support, and then these gamma levels, which can act a bit magnetic when you get closer to them. And that SPX Options Visualizer is a tool I built to add on into Bookmap. It is available in their marketplace. We are pushing to new lows during the cash session here as well. We do see some liquidity beginning to build below. Order book's not very liquid, however, only 47,000 contracts, 46 now, across the book, telling us this could be a choppier trading environment. And there is some seller aggression there. We can hear it. And so becoming just ever more likely we revisit that hot put level where interest has grown pretty substantially over the last several minutes here since the data's come out. Now, 8,000 contracts on that hot put. It's not the most active option on the chain yet, but we are seeing price gravitate a little bit more towards it. What will really tell me there's interest there is if we see a resting bid come in around 5127.50 or so.
Goldman Sachs still expect the Bank of England to start cutting interest rates from June.
It seems a little optimistic, no? NVIDIA 900 sweeps, about 153,000 of premium paid for those on the 900 strike for next Friday. NVIDIA is just all over the unusual options activity today. Let's just see how that's playing out for the stock here. So NVIDIA giving back some of its earlier gains. It did get back up to very close to that 890 level where there's been a lot of interest in calls, especially those expiring today. But buyers didn't have the demand necessary to take out that 53,000 share offer. And so we have seen price reflecting lower a little bit, kind of tracking with the market, rebalancing around VWAP and the point of control. SPX 5100, the most actively traded level if you combine puts and calls on the chain. That would be right back down here to where this hot put level is as well if we're tracking that in ES levels. In terms of options across the chain, the most active
We're
call
looking
and
now to the Fear and Greed Index, 41 out of 100, which indicates fear, while the Crypto Fear and Greed Index is at 48 out of 100, which indicates neutral.
so we're starting to see
We
more
keep an eye on the
interest
VIX as
coming
well, which is
in.
down around 4% at 14.06.
Starting to see more interest coming in those downside puts in the S&P 500 cash index as well. Largely targeting that 5100 level. We can see that the hot put level just converted via the SPX options visualizer add-on here. So you can get a sense as to where options may apply some pressure to price.
I take a Google, GL, sure seeing continued activity, new lows.
Let's take a look at what's
But
going on
earlier
over there.
reports, continued circulations, OpenAI may possibly be launching a search engine on May 9th. Again, that was reported earlier.
Wouldn't that be something? I've always wanted hallucinated search results. Yeah, we are seeing some pressure there in Google. And again, I'm going to take a moment to clean up this chart just because I don't want it to be too busy for you all. It doesn't help me for it to be too busy either. So And yeah, we are seeing some pressure there in Google. Let's see if there's anything on the options. Not too much going on there that's of size that's worth mentioning. So 163, a large resting bid, but 160 really the huge, huge bid here on Google. Obviously, the resting offer at 170, the largest that we're seeing near spot price. But Google from the open just been a straight sell down about, looks like down about $3. Let's go back to the S&P 500, seeing some more selling pressure, new lows, heading towards that hot put potentially, and we are seeing interest in lower bids growing, which tends to be a bit magnetic, particularly as we see offers continuing to fade above.
Just keep in mind in 10 minutes time now at 10:30 a.m. Eastern time, Fed's Goolsbee is due to be appearing on Bloomberg TV as a last-minute interview. All right, let's zoom out just a little bit here for context so we can see the whole move. And we can see a lot of that move being given back here. A lot of these gaps that are made in a sort of vacuum of liquidity pre-market don't necessarily hold. So I'm not saying we have to, give it all up and stay that way, although it's becoming more likely. I am saying that often is the case when you have a move this big, it's likely that you kind of come back and retest that move and then determine whether that move is going to rekindle, right? Whether you're going to kind of come back here to the second most active put strike, where we see liquidity growing just above it, just like we do around the most active put strike, making them more magnetic, making it, I would say, more likely we give up this whole move and then rebalance there, and the market gets to decide what it wants to do. And remember, the big move higher was on bad news is good news, but the bad news was softening labor. Non-farm payrolls coming in lower than expected. But then we saw something that bad news was bad news in a different way, and that was that ISM Services PMI and ISM Manufacturing PMI earlier this week confirming a trend of prices paid rising while employment actually falling and activity slowing, which is not really what you want to see.
Yes, stop alert. Sell 1003.
Here we go. They see the interest building below us, folks, as we get lower and these levels become more magnetic. We're right back down here, going to the most active put strike, and we see interest building at the second most active put strike. We can tell the market's not as interested in higher prices. A lot of those offers overhead fading as interest below is growing. So it does put a lot of that earlier move, that gappy move higher on weaker non-farm payrolls, into question. And we're just starting to balance above that hot put. And remember, when we broke the 20-minute opening range earlier, that did give us a sense that we could have some risk to the downside. Indeed, that's been the case here, particularly after that data. That data was really a powerful catalyst as well. And that break above didn't really last. So I think this is a day to be a little bit concerned about that
Block
whole move
trading
higher
ticker XRAY.
being given
US
back.
Treasury yields now trimming losses after sharp fall. 10-year yield last down 3.7 basis points at 4.534%.
Oh, yeah. Let's take a look at that too, folks. So here's the move in treasuries. This is the 10-year note, okay? This is the price of the futures contract. We're not looking at yields. When we're trading this stuff, we've got to look at the price, right? They might have these yields micro futures contracts that are super illiquid, but the folks that are really trading this stuff, they're trading the actual futures contracts for price. And we can see price had this huge gap up, just like equity futures, in this environment of low liquidity. And that gap up is now being sold down little by little, with some increasing aggression by sellers after that ISM Services PMI print. So I would just be looking at this as well as a bit of a cautionary note, because all that rate sensitive stuff that was getting bid up aggressively earlier, likely to see increasing pressure as the 10-year loses some of that upside velocity. Look at ARKK peaking around the same time the 10-year note did, and some of these others rate sensitive stocks. That kind of stuff doesn't do well in an environment where yields are starting to move back up off of their lows. So just a note about intermarket relationships, because for all of us, whether we acknowledge the existence and importance of the bond market, it does have an impact on equities, especially when rates are as high as they are. All right, we'll just zoom in just a little bit more. I prefer to keep usually around 20-30 minutes of trading on screen, but I'll zoom in and out occasionally just to get perspective. Challenging the VWAP from below here. Buyer is actually showing a little bit more aggression in this last minute or so.
Yes, stop alert. Sell 1295.
I would be a little cautious
Keep in
looking
mind,
at
Chicago Fed President Goolsby currently speaking on Bloomberg TV.
I'll be a little cautious looking at positioning for currencies.
Yes, iceberg alert. Sell 1011.
And
yes,
also
iceberg alert. Sell 1000.
for equities. I think positioning, when we're looking at commitment of traders data, the place that has the most value is commodities. I don't think it has a lot of value for treasuries or futures of equities or currencies or otherwise. And that's just my 2 cents because there's so many other moving parts in all of those other areas. Commodities are really where it's a little bit more of a pure view because there are overall less moving parts. So that's just my 2 cents on, looking at these things. Commitment of traders data is valuable, but it's one piece of a much more nuanced picture for equities and for currencies and for debt.
Fed Scoresby says 175,000 jobs is a very solid report.
Well, of course he would say that. So far, S&P price seeming like it may be rejecting here below VWAP. We'll be watching this. We do see some interest building above here, however, which is a little bit encouraging, but let's see how we do. That the basically 3-touch rejection here and starting to pull
Fed
a little
Scoresby
lower.
says hit a bump on inflation at the start of the year. Says you need to take a step back and see what the inflation bump is. Fed Scoresby says the more jobs reports that look like they did pre-COVID, the more confidence there is that the economy is not overheating.
Yeah, looking more like a rejection at VWAP there, and we do see liquidity building below and fading above. So again, sellers remain favored, and getting back down to this hot put level as a first level seems pretty logical, and then potentially down to that warm put, which is the second most active strike. And we can see interest in those growing. So the calls are still overwhelming. It's 32K versus 24K overall, but some of that is from earlier activity when the market was raging higher.
Fed Scoresby says the Fed must get comfortable that recent inflation is not a sign of re-acceleration. Fed Scoresby says what happened in the job market this year has to be renormed based on estimates of higher immigration. They're still trying to analyze that.
He's speaking live on Bloomberg right now. Have it on the background.
Ticker SGBX staying to Golf Bravo. X-ray sure seeing continued heavy activity, new highs for SGBX. Ticker MI. Michael India sure also seeing a bump in activity, new highs for MI.
And we can see price once again sort of rejecting off that VWAP. We were talking about that a little earlier. We saw some seller aggression picking up there, and still
Ed
looking at
Scoresby says the more
potentially
jobs reports like today, the more comfort I will have.
still seeing some room for this to continue to move lower here. I don't get the sense that Goolsby is
Ed Scoresby says,
particularly.
I think monetary policy is restrictive.
Yeah, it's not. I don't get
Says
the
the
sense
real
that
federal
Goolsby
funds rate is as high as it has been in decades.
Ticker Nikola shares seeing continued heavy activity, new highs. November Kilo Lima Alpha.
I don't get the sense that Goolsby has a clue of what he's talking about, honestly. He got the job because of who his wife is, and if you don't believe me, go Google it. Goolsby wife Fed. She was on the committee of people that the Fed that hired him was using to search for a candidate. So imagine her company being hired and picking her husband to be that person. Some nice nepotism.
Ed Scoresby says, I have to get more comfort on whether the Fed is still on a path to lower inflation.
JP Morgan expects the ECB to deliver 75 basis points of interest rate cuts in 2024 after it removes the October cut. Goolsby says if the Fed remains restrictive too long, it will have to think about the employment side of the mandate, but current numbers are solid.
Ticker Paramount PARA. CNBC reporting Skydance is prepared to walk away from its bid of Paramount if it doesn't hear from controlling shareholder Sherry Redstone.
Fed Scoresby says when the business cycle turns, it is not subtle, with credit deteriorating, unemployment rising, and we have not seen that yet.
just seem to be sort of consolidating here. We basically retested our lows, got a bit of a bounce off that, and we're back to the scene of the crime just here at the volume weighted average price, just below it. Yeah, one quick point. A lot of these pre-market moves that happen in an illiquid environment where it doesn't take much volume to move price around is a much higher burden of proof on whoever's side was favored by that move to keep it intact, particularly when there's a counter catalyst. So I think that's an important thing to think about. Like with today's non-farm payrolls data, everything gapped higher. Often is the case that those gaps don't necessarily hold during the cash session. And since we started to see some signs of weakness, there were a lot of opportunities to fade those. But the biggest opportunity was the reaction to ISM Services PMI, because there was a legitimate data-driven catalyst that the market had no business, whether it was the euro, whether it was rates dropping, so looking at the the various treasury durations, or whether it was some of these equities. A lot of these things didn't really have a lot of business going back up to where they were. And so we saw that fade. And looks like we may see that even more from here. Again, market still seems to be showing less and less buyer conviction. This last little attempt to run things up, that was quite a bit stronger than this subsequent one. You can see this is a little bit more sloppy so far. Let's see how it goes. But I still think a visit down to that hot put is not unlikely. And now actually seeing price push up above VWAP. So we've got to react accordingly. Looking like buyers are actually starting to show a little bit more conviction here in those last several delta bubbles growing. And let's see if we can push things up above the point of control. We have liquidity building above us as well. So just looking a little bit more optimistic in the very short time frame here.
Yes, iceberg alert. Sell 1000.
And we're kind of getting rejected off the 50-day moving average here in the S&P 500 cash and in SPY. So that's something also to kind of keep an eye on if you're zooming your charts out, wondering why this is an area of potential resistance. Around the options market, we continue to see interest in these NVIDIA calls. We've got 887.50s for today, 101,000 premium paid there. 880s for next Friday,
Yes, iceberg alert.
226,000.
Sell 1,000.
226,000 premium paid for those 880s expiring next Friday in NVIDIA. And a brave soul buying Warner Brothers calls WB10 strike for June 21st, 125,000 in premium paid. Some bearish sweeps coming in for CRM, Salesforce. Two different sweeps totaling about 275,000 in premium, targeting a 270 strike on the put side for June 21st. And someone who likes setting their money on fire, potentially buying a $46 ARC strike, sweeping $600,000 into Cathie Wood's ARC earlier today.
Ticker BENF, Bravo, Echo, November, Foxtrot. Share seeing a spike in activity, new highs. BENF.
Just continuing to build acceptance here at lower levels as liquidity builds below us. We had this rush up to the point of control, right around the 50-day moving average on cash. Rejected once again. Sellers took control with increasing amounts of aggression here. And now we're just sort of rebalancing. They're absorbing buyers, and it still, again, looks like the path of least resistance is likely to be lower. Sellers are pulling that point of control lower. And one thing we see in the session volume profile is a lot of the areas where buying interest was expressed is very offside. So sellers are gaining control.
I'll take a BNF shares continuing to see heavy activity, new highs. Bravo Echo November Foxtrot.
And we're seeing some increased conviction to the downside here on that larger red delta bubble as we gravitate towards that hot put and potentially break out of this trading range that we've been in.
Shares currently attempting an upside halt for BENF.
Natural gas futures extending their gains, so prices up to the highest level since February of 2024 now.
Some big moves in natural gas here this morning. Just continuing to ramp up higher. You can see that from the overnight session, really from, what, 8:50 and on. Just a pretty impressive move. NASDAQ continuing to sort of chop around in this range here, seeing a little bit more price action from the S&P comparatively speaking. But overall, not much decision, just made a new lower low recently and then pushing back up to this point of control that was pulled lower by sellers. And we can still see that in the session volume profile, a lot of these buyers are still offsides. And we're actually seeing S&P futures start to push above this point of control here. We'll see where this takes us. We did get that touchdown on the hot put level as I was looking for. And so far, we've reflected higher here. And we do see some greater aggression by buyers coming in.
I'll take our ATUS Alpha Tango Uniform Sandy share seeing a spike in activity, new lows. So headline Altus is huddling with Moelis on options for $25 billion debt load.
Cheniere Chief Commercial Officer Anatol Feyin says LNG supplies to tighten on a heat wave in Asia and technical challenges at some plants.
Continuing to see liquidity build above us here as we break above that VWAP level and close in on retesting that gamma flip level. Let's zoom out just for a little bit of clarity here. So we've come back down to the lower end of the range. We made a new low. We built off of that new low above the point of control, above VWAP, as liquidity builds above us here. So we're starting to see a little bit of a recovery overall in the price action. We've also had a theme almost all day where the amount of activity in calls has exceeded that of puts. So right now, puts total volume across the board there about 43,000, and on the call side about 53,000. Seeing some unusual sweeps here, going to go through them. Northrop Grumman 475s for June 21st, 122,000 in premium paid for there. Silicon Micro SMCI 1000 strike for June 21st, 107,000 in premium paid there. Agnico Eagle AEM 65 strike for next Friday, 130,000 premium paid for that gold miner. Eli Lilly EL 140,000 paid for the 137.5 thousand paid for the 140 June 21st strike. And then some interest coming into SQQQ, the 12 strike. End of the month, last Friday, 126,000 premium paid for that. Apple 185s for next Friday, 155,000 premium paid. And we are seeing that unusually sized call sweeps are outpacing that of puts by about 50%.
So just keeping an eye on the markets now. S&P 500 holding gains up at 0.6%. The dollar, it's reversed some of those losses from NFP this morning, still down 0.4% on the session. So Wall Street took a slowdown in the US job markets as an indication that the Fed will be able to start cutting rates as early as September, as shown by Fed fund futures pricing, with traders sending stocks up sharply as bond yields fell.
XBI Biotech ETF, the 92 strike for June 21st, about 100,000 in premium paid for those, also sweeping through on the unusual calls. Moderna mRNA 120 puts for 2 weeks from now, Friday, May 17th, 200,000 in premium paid for those. XLE
As it is
88
seeing the
puts,
S&P 500 extending
same
gains now as the
expiration,
VIX
two
is
weeks from
dropping. It's
today,
down around
May
6% at
17th, 106,000 in
13.8 on the
premium paid
session
for
now.
those. Global uranium ETF, pretty big bearish put flow there, the $30 strike for 2 weeks from today, May 17th, about 387,000 premium paid there. Visa 280 sweeps for June 21st. Visa 280 sweeps for June 21st. 100,000 premium paid for the credit card company's calls. And we are seeing buyers pulling back up that point of control now and starting to get back closer to some of where they had expressed some of those aggressive views earlier, but not quite there yet on some of these areas in the session volume profile delta on the buy side that are higher than spot right now. Just sort of challenging this gamma flip level overhead, which previously had been resistance as well, and retracing ourselves back into some of that move that we had earlier. Let's just take this all the way back, kind of taking ourselves back into the upper end of the range of this move that we had post non-farm payrolls.
Ticker BPTH, Bravo Papa Tango Hotel. No patent circulations on the name BPTH.
And folks, if you have any questions about anything you're seeing, let me know. Always happy to help. Amazon 185 puts for next Friday, 181,000 in premium swept.
Russia sees May diesel export by sea at the lowest in over 3 years.
Bloomberg is now live talking about AI inference on Apple devices being the announcement last week, but you heard it here first on this stream and on my Twitter yesterday. And we can just see markets sort of chopping sideways here over the last half hour or so, sort of building acceptance at these higher levels. We're just creeping above the gamma flip into more of a neutral territory. We can see liquidity continuing to build above us here. And, we did come down. We touched that hot put level. You can see that at that lower line. And then we started to make this determined move higher with buyers pulling higher the point of control, retesting VWAP, and then pushing back above right into that gamma flip level so far. When we zoom out, we can see that calls are still in favor versus puts, but the gap is narrowing just a little bit. Natural gas just keeps pushing higher and higher and higher and higher here. Something to keep watching. Finally seeing some strength in this thing after a year of just crashing indiscriminately lower. Pretty big sweep on Coinbase 240 calls for June 21st, 162,000 premium paid there. TLT 90s June 21st, 128,000 in premium paid for those.
So seeing Sky News Arabia on X here, citing the Walla website, citing a senior Israeli official, they say that Hamas is expected to agree to the first phase of the exchange agreement with harsh conditions.
Block trade in ticker, GRAB.
All right, folks, that's going to do it for the public stream today. If you'd like more, come over to the Traderade Discord. You can get up to 20% off using the code Mayhem20. That's Mayhem20 at checkout. If you like Bookmap, visit traderade.com/bookmap for up to 40% off. And the advanced SPX options visualizer is now on the Bookmap Marketplace. You can get monthly, yearly, or lifetime subscriptions. Just visit traderade.com/SPX. So hope to see you all around next week. Hope you have an awesome weekend ahead. And thank you so much for tuning in.